Netflix Incorporated, a name that has become nearly synonymous with streaming entertainment, is more than just a service where we binge-watch our favorite shows. It's a global powerhouse, a tech-driven content creator with massive reach and a unique business model that's reshaped the industry. When people think of innovation in media, Netflix is usually at the top of that list, and for investors like me, it's a company worth watching very closely, especially when we dig into the fundamentals, growth potential, financial health, and overall market performance. So let's take a deep dive together and look at what makes Netflix stick from an investor's perspective. Fundamentally, Netflix remains one of the strongest players in the streaming world. Its revenue for the trailing 12 months is pushing past $40 billion, and that's not just from North America. International growth is fueling much of its expansion, a smart move that's helping to balance some of the domestic saturation in the U.S. market. Earnings per share, EPS, currently hovers around $21.64, which is impressive when you think about how much the company is investing in content. The P/E ratio is in the mid-50s, which might seem high at first glance, but for a growth company with global ambitions and expanding margins, that premium valuation is understandable. There's no dividend here. Netflix reinvests its profits, which I personally like for a growth company. Looking at the bottom line, net income is on a healthy trajectory. They recently clocked nearly $3 billion in quarterly net income. And that's no small feat when you consider how much competition exists in this space. What I like is how Netflix has transitioned from being a company constantly in investment mode to one that's proving it can sustain profitability at scale. That's a signal to me that it's not just about growth anymore, it's about quality growth. Now let's look at financial health, because that's where you separate hype from sustainable operations. Netflix's debt-to-equity ratio sits at about 0.63, which shows they're being responsible with their balance sheet. They've trimmed a lot of unnecessary debt and are now in a position to manage cash flow much more efficiently. Speaking of cash flow, free cash flow has become a bright spot for Netflix lately. They've swung from negative to solidly positive free cash flow in recent quarters. That's a huge deal in this sector where content spending can eat up capital like wildfire. Current ratio stands at around 1.2, which isn't sky high but is solid enough to give me confidence that they're not scrambling for liquidity. It's a healthier company than it was even just 2 years ago. Now for growth metrics, and this is where Netflix shines even more. Revenue growth year over year has been around 15% lately, which is significant considering its massive size, and earnings growth has actually outpaced that, which tells me management is finding efficiencies even as it expands. Market cap now sits well over $500 billion, and in today's economy, that kind of valuation doesn't come without long-term trust from the market. I also look at user growth a lot. And the fact that Netflix added more than 10 million subscribers globally in the last 12 months tells me the brand still has serious global pull. They're even starting to gain traction with their ad-supported tier and password-sharing crackdown. Some investors doubted that move, but so far, it's working. Valuation is always tricky with Netflix. Its price-to-book (PB) ratio is steep, over 20, which tells us the market is pricing in not just current performance but future dominance. That might scare off value investors, but I think it makes sense if you believe in the company's long-term monetization potential. The PEG ratio is north of 3, which again looks expensive at first glance, but I like to dig deeper. If earnings continue to grow at 25% plus annually and subscriber momentum continues, that PEG ratio could shrink faster than people think. For me, it's not just about what the ratios say today, it's about where they'll be 18 to 24 months from now. In terms of performance metrics, Netflix's beta sits at around 1.27, so it's slightly more volatile than the broader market, but that's expected for a tech-forward growth stock. Over the past 52 weeks, the stock has moved between roughly $587 and $1,215, and right now it's trading near its all-time highs. For some that may signal caution, but to me it reflects renewed investor confidence and strong fundamentals backing the price movement. A stock doesn't double in value just because of hype. There has to be substance, and Netflix has it. What really stands out to me is how Netflix has evolved. It's not just a streaming platform anymore. It's becoming a fully integrated media and technology company. They're investing in gaming, licensing content more strategically, producing global hits in languages other than English, and leaning into AI to improve content recommendations and cost efficiency. They've even started producing content regionally for local audiences, a strategy that gives them more cultural relevance and cost advantage. To me, that's how you stay ahead in a brutally competitive industry. Now, should you buy a Netflix stock? That's always a personal decision, but here's how I see it. If you're looking for steady dividends or traditional value plays, Netflix may not be for you just yet, but if you believe in the future of digital content, if you think AI, data, and international scale matter, and if you're comfortable holding a high beta, high multiple stock for long-term gains, then I think Netflix deserves a spot on your watch list, if not in your portfolio. In conclusion, Netflix continues to innovate while proving it can also execute financially. The company is profitable, cash flow positive, and growing its global base despite saturation in mature markets. Yes, it carries a high valuation, but for those who see the long game, it may still be undervalued. I'm not saying go all in, but I am saying this: in a market full of fads and overhyped IPOs, Netflix is a proven operator with real staying power. If it keeps firing on all cylinders like this, then those buying today might be very happy a few years down the line.